for longer on rates. Meanwhile, Fed Governor Christopher Waller says third quarter U.S. GDP was, quote, a blowout performance. But despite the strong number, new data is signaling a slowdown. This as fellow Fed Governor Lisa Cook said this morning that we must, quote, remain vigilant to potential shocks that could exacerbate global financial system vulnerabilities. Joining me right now is Miller Family Office Portfolio Manager John Spallanzani. John, it's great to see you. Thank you so much for being here. I mean, sitting on that trading desk, talking to all of the clients that you talk to every day, John, are they worried about a slowdown in the economy? Are they worried about the impact of these 11 rate hikes from the Fed?
Well, we're not talking to the clients anymore. I'm at the family office, so we're just basically managing money for the family. But in terms of the Fed, yeah, I think that things are obviously going well for them. We had a great unemployment print in terms of a Goldilocks, where we had payrolls printing 150,000. We had wages coming in line. We also had a big bump up in productivity, which was very positive prior to that. And unit labor costs were down quite a bit. So that has helped the bond market, as well as the refunding announcement, which basically said that they were going to keep most of the issuance to the short end, which is actually a good idea. You might get 5% for 3 months, but you don't know if you're going to get 5% for 3 years. And right now, the economic data is trending down a little bit. We see the unemployment rate ticked up quite a bit from the lows. So, we're bumping up against the 4% handle. And I think the Fed is more concerned with employment now. Inflation is going down, but as inflation goes down, the Fed actually becomes more tighter doing nothing.
Tell me about the opportunities that you see out there today. We had new Fed data showing consumer borrowing is rising on credit cards and car loans. Many Americans falling behind on payments, John. Consumers under the age of 50 now hold 55% of all U.S. household debt. That's the most on record. Does this play into your ideas and opportunities that you see in the family office right now?
Well, some of our big positions are Amazon, so that was obviously a beneficiary. It's one of the best performers this year. Bitcoin is another big holding of ours, and Clear Secure, which just announced a special buyback this morning, as well as a dividend increase, is another holding. So those are our three big holdings. We have some others that do quite well, but not as big. But I think in terms of the consumer, yeah, the consumer is stressed, right? The Fed, the government printed, $4 trillion. Everybody felt that you only live once, the YOLO moment after the pandemic, when everybody was actually able to go out and spend. So people were tired of, traveling in the United States, it seemed, and they went overseas to Europe and all over the place. And now that spending and those free checks are kind of dwindling. So yeah, it's kind of unfortunate that now we're seeing people going back to their old ways, basically charging to keep up with their lifestyle that they're so accustomed to. So that's a big thing. And we also saw a lot of people leave the workforce, after the pandemic. A lot of people retired, a lot of people just didn't come back. So labor force participation is actually still very low. We haven't seen the big uptick in that. So you have the unemployment rate ticking up as people are also not in the force. So if people decide, wow, all of a sudden I can't make my payments, I need to get a job, and jobs are not available, that's going to be a big problem.
Yeah, it's a great point. It's just why I like to look at the price of oil. I mean, do you see oil as a determinant or as an impact? Oil prices are lower this morning, but we were talking about a $100 barrel of oil just about a week or two ago, John. And I'm wondering, when you start seeing oil prices get elevated the way we have been, does that worry you that impacts economic growth, or does a high oil price indicate to you that maybe things are not so bad, that demand is growing and you've got demand for oil? What's your take, and how important is this a factor for your allocating of capital?
Well, I think oil, was trending down prior to the Hamas invasion of Israel. So that was bumped it back up to the low 90s, and now we're back in this downtrend. We see China numbers are printing really bad. The global economy, Europe is not so great. So I think the oil really is trading off of what's happening in the global market in terms of the economies elsewhere, as well as the United States is trending down. So really, the fact that oil is unable to hold a bid kind of means that the guys in the pits are saying, you know what, growth is slowing here, and we can't really hold these prices above 80. And that's, obviously we need to refill the strategic petroleum reserve. So the lower the prices go, the better it is for the country. So that is a positive.
John, you expecting a year-end rally?
Yes, we're still bullish. We're in a bull market, and good things happen in bull markets. So the Nasdaq is up quite a bit. The S&P entered a bull market in June. We had a little bit of a correction, but now we've gone past the worst seasonal factors. We got past October, and now the market seems to want to trend higher into the year end.
All right, we will leave it there. Great to see you, John. Thanks so much.
Thank you, Maria.
John Spallanzani joining us this morning, Miller family. Coming up.